afternoon friends. The Income Tax Bill 2025 as amended and with the proposed changes by the Select Committee has been tabled in the Parliament today. There are many suggestions of the taxpayers, trade and industry which have been accepted by the Select Committee. However, there are certain changes, amendments, additions made in the Income Tax Bill 2025 which may require further deep dive. We will discuss 5 important proposals and changes, additions by the Select Committee in Income Tax Bill 2025 which would be important for taxpayers. First up, the transition provisions in any amendment or replacement of any statute is important for the first 1 or 2 years. We have discussed this in our earlier videos also. You can find it on our YouTube channel. That transitional provision in the new Income Tax Bill 25 is under clause 536. Clause 536 to subclause J is important because it provided that any notification, instructions, etc. issued in the earlier regime ITA 61 would continue to apply if it is not inconsistent with the provisions of ITB 25. Now they have added one single word circular to this clause 536 to J. What is its implication? It means that any circular which was issued in ITA 61 regime and which is inconsistent with the provision of ITB 25, then it would not apply. Now, say for example, the circular issued in June 2021 with respect to section 194 capital R, that is TDS at the rate of 10% which need to be deducted on provision of benefits or circulars. Now, post sale discount is a benefit or circular as stated, but due to such circular issued in June 21, TDS under 194R was not applicable on post sale discount which is passed on through commercial credit notes. However, please note that it is a beneficial circular and it is inconsistent with the provisions of 194R. The provisions of 194R have been replicated in ITB 25 and currently the position stands in our view that circular, a beneficial circular issued in June 21 would now be inconsistent with the provisions of ITB 25 with respect to TDS as provided in clause 393. So, this one important word which is added needs to be further analyzed and the impact need to be further analyzed. Possibly the CBDT should going forward come up with a clear list of circulars, notifications, instructions, etc. which would continue to apply in ITB 25 also. Second, one important suggestions of the taxpayers for the amendment which was already made in February 25 that has not been considered. We will come to those which are considered and very many suggestions have been considered. But a suggestion for clause 253 for surveys under income tax has not been considered by the Select Committee. The suggestion was that as per the amendment in Income Tax Bill 25 vis-a-vis ITA 61, there is a mandate for the taxpayers to provide the access code for the digital data to the officers on survey. While this was always happening practically, but now it becomes a legal mandate for the taxpayers to provide the user ID and password of their digital data stored in clouds, etc. to the officers on survey. This provides wide range of powers to the officers on survey, and it may be further important to deep dive as to whether to suggest to the CBDT to provide such powers. Of course, such powers are important for the carrying on of duties, but it should be done with certain limitations which are specified. Now, a very important and a clause which was providing a lot of hardship and would have led to a lot of litigation going forward, that has been deleted after representations from the taxpayers, and rightly so. The clause was clause 263(1)(a)(9). Now, this clause, if you read it wholly, it seemed to provide that in case the return is not provided by the due date, then taxpayers would not be eligible for their righteous refunds. So, in consequence, even if there is a 1-day delay in the return filing, as it seemed to provide, the income tax officers would be within their rights to deny the refunds. Even though CBDT claimed that such was not the intention, yet so it seemed from the law. And now they have deleted this clause 9 of 263(1)(a), and therefore such a understanding is not to be. Refunds would continue to be eligible even if the returns are belated. Now, another important amendment which is accepted, a suggestion which is accepted by the select committee, is the eligibility of deduction as per the current section 80 capital N for those corporates which are going with the special rate of tax of 22% under section 115BAA. So, 115BAA of ITA 61 becomes clause 200 of ITB 25, and 80M of ITA 61 becomes 148 of ITB 25. And now it has been amended by the select committee and proposed that deduction under clause 148 would be eligible for those taxpayers, corporates, who are going for the special rate of tax of 22% plus cess, surcharge, etc. under clause 200. This is a big relief that intercorporate dividends would now be eligible as a deduction for such taxpayers, corporates who apply for or are eligible for the special rate of tax at 22% under clause 200. And last and fifth important change and amendment proposed by the select committee, which we will discuss in this video. Going forward, we will make more videos for such changes which are there, is again a positive change under clause 395. So, all the sections of TDS are now clubbed under clause 393, 394 and 395 of the Income Tax Bill 25. So, clause 395 for lower rate of deduction of TDS, that is LTDS certificates, currently 197 of ITA 61, that provided that only low TDS deduction certificate can be issued by the income tax officers to taxpayers. However, it did not provide that NIL TDS deduction certificate could also be issued. So, this created again a concern, because in the current regime, specifically for many businesses like startups, etc., which are running on losses for many years, NIL TDS deduction certificates every year is important to ensure that their funds are not blocked. Now, this suggestion has been accepted, and NIL TDS deduction certificate in alignment with ITA 61 can be issued by ITOs, income tax officers, in ITB 25 also. However, please note that as not there in ITA 61. In ITB 625, going forward, these ITOs, if they find a contravention, may even cancel during the year such TDS, low TDS or NIL TDS deduction certificates which are issued. So, going forward, the ITB 25, so it seems, would be more stringent than ITA 61. Therefore, it is important that all the taxpayers should consider implementing the ITB 25 with ease so as to have a seamless transition. Thank you very much for watching. Do like, share and subscribe to this channel. Thank you very much.